Good morning, investors. It is Monday, December the 8th, 2014. Taking a look at the charts, we got the AlgoTrades trend chart. So we can see here the trend when the candles are green or the bars are green, we're in an uptrend. When they're orange, the markets are mixed. When they go to red, it means we are in a downtrend. And of course, you can see we've gone through this very sharp kind of correction and rebound. In the grand scheme of things, it was a very sharp capitulation sell-off, very sharp rebound in price without really any significant pullbacks, just a one-day pause here and there, and then it would keep on running. Overall, last week, we started to see this choppiness that we're looking for in the market. We want to see the market start to oscillate and show this kind of more or less a noisy market where most people are struggling to get into positions. This is where the system usually starts to pick up plays and can have repeated plays over and over again. So you can see here these green fluorescent green bars here, or this section goes to show where we got into an oversold territory. And of course the system went long. We took a long play and we saw a nice bounce within about, I think it was a session, or I think it was 3 sessions. And we hit our first target. The market poked to new high. Everything was showing that there really wasn't going to be serious follow through imminently, and the system took a profit of about $1,000, almost $1,100 per system trading in your account, so per contract. And overall, we're back in cash now, waiting for something to kind of play out. Now, if we just zoom back on the charts and we just go back here and we look at this year's price action, overall, we started off the system with the first trade here, first week of March. And what I want to point here again is just simply that the system doesn't trade extreme volatility. It doesn't trade things that move straight down and straight back up. It needs, these are the most dangerous times to trade. They're the toughest because you get the biggest percent swings, and really all you're trying to do is, when the market moves, you can't pick tops and bottoms. If you happen to luck out and get it, great. But overall, when the market goes into these straight sell-offs and rebounds, these V-shaped recoveries, just like what we've seen, extremely dangerous to just jump on the bandwagon and chase prices. And of course, the market's what the market does when it moves straight down, straight back up. These aren't really times that are really all that tradable. They're very high risk times to trade. You need the market to set up and provide a shorting opportunity early. Sometimes you just don't luck out with them. But overall, what we're looking for is this noise here, this chop in the market. We had our first play here, we got long. Again, we saw the market start to oscillate and show some choppiness, and of course that's where we got in. We had a nice streak of winning trades through there, more trades over here. We had a great June, awesome July. We want this oscillation time in the market. It goes to show the market can chop and grind sideways or upwards, and we can do fairly well as the market does that. And that's what we're starting to see now. We're starting to see the market chop around and become more or less a good opportunity for us to get involved in the market. Now overall, we've had a really strong bounce. I wouldn't be surprised if we see some type of stronger pullback, but you never know what the market's going to do, and we're simply going to play the market, and we could easily see this continue to run up. We are going into holiday season here. We're only a couple weeks away, and we could easily see the market continue to grind higher and or just chop sideways here. But either way, it's getting into the type of price action where we can start pulling more money out of the market, just like we did last week. Anyways, that's really it for this morning. Take care. Bye-bye.